Hi friends. In our earlier videos, we have been dealing with the trading account, the profit and loss account, and the balance sheet. In this particular lecture or in this particular video, we'll learn how to prepare all the three together. That is, to prepare the entire trading account, P&L account, and the balance sheet together in one problem. You are given extract of a trial balance of Messrs. Sunil Traders as on 31st March 21. Particulars debit rupees, credit rupees. You are given the trial balance. Opening stock of 1 lakh. Purchases 10 lakh 50,000. Purchase returns 50,000. Sales returns, wages, carriage inward, salaries, rent, telephone repairs, depreciation, general expenses, discount allowed, advertisement, bad debts, interest income, discount received, land and building, machinery, furniture, computer, data, bank balance, cash balance, creditors, fixed deposits in banks, other liabilities, and capital. And you are given some closing stock of unsold goods of rupees 3 lakhs also. So, how do you deal with this problem? We'll immediately start preparing the trading account, the profit and loss account, and the balance sheet. So, we'll start here. Trading account of Messrs. Sunil Traders for year ended 31st March 21. Particulars rupees, particulars rupees and rupees. Opening stock is given to you. Opening stock is debited to the trading account. We pass the entry trading account data to opening stock to close the account, and the balance is transferred to the trading account. Opening stock rupees 1 lakh. Purchase is also closed by transferring it to the trading account. We pass the entry trading account data to purchases, but we write it in the inner column because we have an adjustment relating to purchase returns. Purchase returns, we pass the entry purchase returns account data to purchases. That is why we subtract it from purchases. Purchase returns 50,000. The net amount is shown in the outer column, 10 lakh rupees. Sales is closed by transferring it to the credit side of the trading account. We pass the entry sales account data to trading account. So we credit the trading account by sales 17 lakh 50,000. Sales returns is 50,000. Sales returns is showing a debit balance. To close it, we pass the entry sales account debit to sales returns account. So it is subtracted from sales less 50,000. Outer column I'm going to show 17 lakhs for sales. Wages is a direct expense. We debit it to the trading account. We pass the entry trading account data to wages 1 lakh rupees. Carriage inward is also relating to the manufacture of the goods, or we can say to bring the goods to the point of sale. Carriage inward debited to the trading account 50,000. And we are also given as an adjustment closing stock of unsold goods 3 lakh. What is the entry we pass? It is not given inside the trial balance. That means we have not shown the impact of closing stock in our books of accounts. So this trial balance is prepared before recording any entry for closing stock. So the entry for closing stock is passed for the first time in the trading account. So we pass the entry closing account closing stock account data to trading account. Trading account is credited and the closing stock account will be debited and it will be shown in the trial balance. So we'll pass the entry here by closing stock. Closing stock entry is written for the first time in the trading account. We will now open the new ledger closing stock and it will be debited and it will be showing a debit balance. It will be shown in the balance sheet. Now we can calculate the gross profit of the business. 17 lakh plus 3 lakh is 20 lakh. 20 lakh minus the expenses, 11, 12, 1250. So we have 7 lakh 50,000 as my gross profit. 12 lakh 50,000, 7 lakh 50,000, yes. So I'll write 2 gross profit carried down to P&L account. So this amount is transferred to the P&L account. From here we'll continue and we'll prepare the P&L account. Same format, P&L account will continue. So particulars, rupees, particulars, rupees and rupees. So this gross profit is now brought to the profit and loss account. We'll write by gross profit brought down 7,50,000. Now let us see what are the other items left in the trial balance. Salaries 1,20,000. It is debited to the P&L account. 2 salaries 1,20,000. 2 rent 60,000. P&L account retard to rent account is the entry we pass. To transfer telephone expense we pass the entry P&L account retard to telephone expenses 12,000. Repairs is also transferred to P&L account. We pass the entry P&L account retard to repairs 5,000. Depreciation is also transferred to the P&L account and closed. We pass the entry P&L account retard to depreciation 10,000. General expense is also transferred to the P&L account. We pass the entry P&L account retard to general expenses 15,000. Discount allowed is also closed by transferring it to the P&L account. P&L account retard to discount allowed 5,000. Advertisement is also closed by transferring it to the P&L account. We pass the entry P&L account retard to advertisement 30,000. Bad debts is also closed by transferring it to the P&L account. We pass the entry P&L account retard to bad debts 10,000. We have some indirect incomes here, interest income and discount received. These two accounts are showing a credit balance, so they are debited and transferred to the P&L account, and P&L account is credited. We pass the entry interest income account retard to P&L account, discount received account retard to P&L account, so that the balances will get closed and transferred to the P&L account. By interest 10,000, by discount received 1,000. Then we have land, building, machinery, furniture, computers, debtors, bank, cash, creditors, fixed deposits, other liabilities, capital. So these are not shown in the P&L account. So we can now close the profit and loss account to find out the net profit of the business. Total the credit side 7,50,000 plus 10 is 760. 7,61,000 is the total of the credit side. 7,61,000 will total the debit side now. 120 plus 60 is 180, 192, 197, 2,07,000, 2,22,000, 2,27,000, 2,57,000 and 2,67,000. So we get the debit total as 2,67,000. We'll check once again. 120 plus 60 is 180, 192, 197, 207, 222, 227, 257 and 267. Out of 7,61,000, let us subtract 2,67,000. 11 minus 7 is 4, 15 minus 6 is 9 and 6 minus 2 is 4. So we are left with 4,94,000 as the net profit. So we'll write 2 net profit transferred to capital account. I hope you remember the entry. We pass the entry P&L account retard to capital. So capital account will be credited with 4,94,000. Now let us prepare the balance sheet of the business. We have some assets, land, building, machinery, furniture, computers, debtors, bank balance, cash balance, fixed deposits. Let us start preparing the balance sheet. Balance sheet of Sunil Traders as on 31st March 21. Liabilities rupees, assets rupees and rupees. Let us see what are the assets Mr. Sunil is having. Land and building is 5 lakh, machinery is 90,000, furniture is 50,000. 5 lakh, 90 and 50. Land and building 5 lakh. Machinery 90,000. Furniture. These assets, these accounts cannot be closed, that is why they are listed in the balance sheet, and the balances will be brought into the books of next year by passing of an opening entry. Computers is 90,000, debtors is 95,000, and bank is 1 lakh. Computers 90,000, debtors balance 95,000, and bank balance is 1 lakh rupees. So we have listed down all the assets in the balance sheet asset side. Then we have cash balance of 1 lakh. No, cash balance of only 20,000. Cash balance of 20,000. We are forgetting about one more asset which we have, which will show below the debtors, that is the stock. Closing stock. Closing stock 3 lakh rupees. From where this is coming? We passed an entry. Closing stock account debtor to trading account 3 lakh rupees. Trading account was credited. Closing stock ledger, if you open, it will show a debit to trading account 3 lakh. So this account is showing a debit balance. It is not yet closed, so it will be shown in the balance sheet asset side. This was not there in the trial balance, but when we were preparing the trading account, we created this new account. We have one more balance, asset fixed deposits 1 lakh rupees. So we'll show fixed deposits also. It's an asset for the business. Fixed deposit 1 lakh rupees. Then we had creditors for the business and other liabilities. So let us see what are the creditors and other liabilities balances. Creditors was rupees 1 lakh, other liabilities 20,000, and capital of 7,31,000. Creditors is 1 lakh, other liabilities is 20,000. Capital, as per the trial balance, it is 7,31,000. But here, if you see the P&L account, we have written P&L account net profit transferred to capital account. Here we have passed an entry. The entry we have passed is P&L account debtor to capital account. This is the entry we have passed, 4,31,000. This entry has been prepared after the preparation of the trial balance. That means this entry has to be given effect now. So the balance in the P&L account has to be transferred to the capital account. So what we do is, we will go to the capital account and add net profit 4,64,000. So the total will be 5, 9 and 11. So 11,95,000 is the total of the capital. Now the balance sheet assets and the liability should tally. Let us total the liability side. 1195 plus 1 is 1295. 1295 plus 20 is 13,15,000. So the total of the liability side is 13,15,000. Let us total the asset side now. 5 lakh plus 90 is 590, 640, 730, 825, 1125, 1225, 1245 and 1345. I'm making a mistake. Let's check again. 5 lakh plus 90 is 590, 640, 730, 825, 1125, 1225, 1245 and 1345. I think we have made a mistake somewhere. Let us check where we have made a mistake. What is the total of the net profit? Sorry, for total of the profit is 4,94,000. So the net profit is 4,94,000. That means capital balance will be 731 plus 494 is 5,000. And 12,25,000. So 12,25,000 plus 1,20,000 is 13,45,000. So our balance sheet exactly tallies. So we are having assets worth 13,45,000 and liabilities worth 13,45,000. The difference came because we took the net profit as wrong. It was not 464, it was 494. So with this we prepare the trading account, P&L account and balance sheet for the problem. So this is how we prepare the trading account, profit and loss account and balance sheet. So this was a problem where we discussed how to prepare the trading account, P&L account and balance sheet all together.